Hey Bitcoiners, Lockie here from Edge21, your go-to source for trending Bitcoin news, Bitcoin price analysis, and actionable insights. Today, we're diving into an incredible transformation in corporate finance that's shaking up balance sheets across the globe. From innovative capital market strategies to the growing adoption of Bitcoin as a treasury asset, companies are finding new ways to capitalize on the digital gold rush. Firms like MicroStrategy, Marathon Digital, Hut 8, Metaplanet, and Semler Scientific are leading the charge. How are they doing it, and what can we learn from their strategies? Stay tuned to find out as we break down the numbers, the risks, and the rewards of this bold financial revolution. Let's start with the headline-grabbing moves of MicroStrategy. Recently, the firm purchased an additional 15,400 Bitcoin for $1.5 billion, bringing its total holdings to a staggering 446,000 BTC, with current value of approximately $43 billion US. With over $23.4 billion invested, this is no small gamble. But how is MicroStrategy funding this? Enter the world of convertible notes. These financial instruments allow MicroStrategy to raise capital without dipping into its operational reserves. Here's the play. Investors loan money to the company, and in return, they get interest payments. But, and this is the exciting part, they also have the option to convert that debt into company stock if the price rises. It's a win-win. If Bitcoin and MicroStrategy's stocks soar, everyone profits. However, if Bitcoin crashes, MicroStrategy faces serious liquidity risks as most of its balance sheet is tied up in Bitcoin. The volatility of Bitcoin makes this strategy a bold yet risky bet. Moving on, let's talk about Marathon Digital Holdings, one of the largest publicly traded Bitcoin mining companies. Marathon has embraced Bitcoin not just as a mined asset, but as a strategic treasury asset. The company recently announced its holdings now stand at 44,394 Bitcoin, a testament to their aggressive approach to treasury management. By tapping into convertible note offerings, they're borrowing at minimal interest rates, leveraging the proceeds to buy more Bitcoin. This strategy capitalizes on the anticipated rise in Bitcoin's price while ensuring liquidity remains intact. Another significant player is Hut 8 Mining, which has also been expanding its Bitcoin reserves. Hut 8 made headlines by purchasing 990 Bitcoin for $100 million at an average cost of $10,710 per Bitcoin. This brings their holdings to 10,096 BTC, worth over $1 billion. What's unique about Hut 8 is their plan to use these Bitcoin holdings in innovative financing models. By leveraging Bitcoin's rising value, they're effectively hedging future investments in mining equipment and other operational upgrades. This is a strategic play that links Bitcoin to capital markets in a way that ensures long-term growth and stability. Now, let's shift our focus to Metaplanet, a Japanese investment firm often referred to as Asia's MicroStrategy. On December 23rd, Metaplanet made headlines with its largest Bitcoin purchase to date, 619.7 BTC, worth $60 million. This quadrupled its previous acquisition and brought its total holdings to 1,762 BTC, valued at approximately $168 million. What makes Metaplanet unique is its broader strategy. Beyond buying Bitcoin, it plans to integrate BTC into its core business through BTC loans, equity investments, and convertible bonds. The firm even announced plans to transform its hotel brand into Bitcoin hotels and launch Bitcoin Magazine Japan to promote Bitcoin awareness. By 2025, Metaplanet aims to hold over 10,000 Bitcoin, solidifying its place as a top Bitcoin holding company globally. Despite short-term volatility, Metaplanet's stock is up 2,100%, showing how its aggressive Bitcoin strategy has captured investor interest. This surge demonstrates the potential of integrating Bitcoin into corporate strategy. Now to Semler Scientific, an innovative healthcare technology company that has adopted Bitcoin as its primary treasury reserve asset. As of December 15, Semler Scientific holds 2,084 BTC, purchased for an aggregate $169 million at an average price of $80,900 per Bitcoin. The firm's Bitcoin yield, a key performance indicator developed by MicroStrategy, has reached a staggering 92.8% since implementing its treasury strategy earlier this year. What's remarkable about Semler is how it's funding these these acquisitions. The company raised significant capital through its at-the-market, or ATM, equity program, generating approximately $100 million in gross proceeds. Semler's leadership believes Bitcoin offers a superior store of value compared to gold and provides a hedge against inflation. Chairman Eric Semler stated, "Bitcoin's architectural resilience and scarcity make it preferable to gold. As the gap in value between gold and Bitcoin closes, we anticipate outsized returns." Semler also continues to innovate in its core business. The company develops cutting-edge medical products like QuantaFlow, a device aiding in cardiovascular disease diagnosis. This dual focus on healthcare technology and Bitcoin is a unique approach that has driven its stock up 75% in 6 months. Why are these companies adopting Bitcoin as a treasury asset? The answer lies in Bitcoin's appeal as a hedge against inflation, its potential for value appreciation, and its ability to attract investor interest. The strategies used by firms like MicroStrategy, Marathon, Hut 8, Metaplanet, and Semler Scientific illustrate the convergence of traditional capital markets and digital assets. By issuing stocks, bonds, and convertible notes, these companies are raising capital to invest in Bitcoin, seamlessly integrating it into their financial operations. Corporate finance professionals should take note. Bitcoin isn't just a speculative asset, it's becoming a strategic tool for balance sheet management and growth. The introduction of FASB accounting rules for digital assets further legitimizes Bitcoin in financial reporting, reducing concerns about volatility and enhancing investor confidence. Finally, the broader implications of this trend are significant. As Bitcoin gains acceptance in corporate finance, institutional demand will rise, driving further adoption. The feedback loop created by corporate and institutional interest is accelerating Bitcoin's integration into mainstream finance, making it an asset class that can't be ignored. The question for corporate finance leaders is no longer whether to adopt Bitcoin, but how to do so effectively. By understanding innovative funding mechanisms like convertible notes and exploring Bitcoin's potential as a treasury asset, companies can position themselves for the future of finance. And that's a wrap on today's financial insights. The world of corporate finance is changing, and Bitcoin is at the forefront of this transformation. Whether it's MicroStrategy's bold bets, Marathon's strategic treasury expansions, Hut 8's innovative financing, Metaplanet's comprehensive strategy, or Semler Scientific's dual focus on Bitcoin and healthcare, these companies are rewriting the rules of treasury management. Will your company follow their lead? If you found this analysis insightful, don't forget to like, share, and subscribe to Edge 21 for more updates on the evolving world of Bitcoin and finance. Bitcoin is changing the game, and we're here to give you the edge you need to stay ahead of the curve. Don't forget to check out edge21.co, where you'll find personalized content, including trending tweets, notes and notes, videos, articles, and price analysis about Bitcoin. Thanks for watching, stay strong, and hodl on.